Hello guys, it's me again. The previous video, I just highlighted 5 things you should consider before buying any shares. So therefore today, I want to just highlight the other 5 because there should be like 10 things. 10 key things you should consider, or 10 key points you should consider when buying some shares. The first one, in the previous video, we said the company performance, and we explained it, and we said that you should consider the company performance, the way the company used, or the way the company usually performs. Then the next one is dividend history, the way the company has been paying the history or the dividends. The other one, the number 3, share price valuation or valuation. And we said, as for that, we said that if the company shares hasn't been like growing as times goes on, you should not consider buying those shares. And if the company shares has been just declining within time, you should not be buying those shares. But if the company shares has been like appreciating within time, that is a good thing, or that is the one thing that you should consider and just go and buy those shares. But remember, I usually tells people that, and I usually tells you today you are watching this video, don't just rush to buy some shares because you have just saw some few videos on YouTube and you have seen people saying that you should go and buy this, you should go and buy this. Remember, that is their research, and that is where their capability of their money reaches them to buy, and their potential to have that money, to have that capability of money allows them to be there. Then the other thing, we said the industry outlook. We said that the industry outlook should consider the company's what? The company's performance, and not even just performance. We said that when you want to buy some few shares, you should consider your portfolio still. You should consider your portfolio, the way the performance of your portfolio. You should not go and invest all of your money in banking, or just telecommunication, or insurance, or just energies. No, you should consider to balance your portfolio. And the fifth one, we said the financial health, and we said that if the company has been able to be like, as their debt can be able to be paid, or it's an equivalent not a large amount of number, or a large amount of money, you can just consider go and buying that shares. But if that company has a large amount of debt in the government of Kenya, you should not go and just buy, because even you should consider the insurance. Just go and do your researches and see if this company have been able to be like paying the insurance for this period of time. If they have been able to be paying their insurance good and their debit good, well and good, just go and invest it. Now, on today's video, we are just going to highlight from the 6th one to the 10th one. So therefore, the 6th one, we said that, or we can just say today, it's liquidity. The liquidity, this one, those people usually deals with trading forex knows more about the liquidity. And the liquidity usually say that, I won't explain it in terms of forex, but let me just explain it in terms of shares. And as for this, we can just say buy shares that are actively traded, so that you can easily sell them when needed. As for this, we could just say that the liquidity is whereby the market usually rises and then come back to take some few orders. So therefore, you can just buy, you can just consider buying some shares for a short time, because there are few people who usually wants just for the short term investment and the long term investment. But as for the short term investment, you should consider liquidity and say that, go back and just analyze your market and say, on this market will rise until this point and then come back at this point to take some few liquidity or take some few orders at this point. Now you say that if this market rises to this certain level, I'm going to sell these shares at this point, then allow them to drop to a certain level, take those orders. After the market have just taken those orders, you can just buy again those shares so that the company or your money can be doubled. I hope you understand. That time is just a little bit complicated. Let's go for the seventh one. The second one, we can just say the market trend. Look at the market trend. If that market has been able to be determined whether the market overall of the market is a downtrend or an uptrend. Let's take, for example, like KPLC. The KPLC, we can say its market trend is an uptrend because it has been rising in some few weeks, almost around, I think, 52 weeks. Within the past 52 weeks, KPLC have been doing somehow good, even though in between has been just dropping, but it has been gaining some momentum. So therefore, you could just consider the market trend. The eighth one, we can just say management quantity. As for the management quantity, we could just say that strong and experienced management terms are more likely to deliver long-term success. If I could just tell you, for you as a beginner, if you don't know more about the investment and the management of your account, there are some banks who usually manage your account and tells you when to buy and when to sell. So therefore, the management quantity is an important thing to look, because if you don't know how to manage, and if you don't know how to analyze your market, you could just buy, and at some point you could just see that your portfolio has been just gaining some money until to a certain point it started dropping. So therefore, management of your account or the long-term management usually brings success in your portfolio and in your investment. So therefore, you should consider managing and learn more about how to manage your account and how to manage your portfolio. As for that, you should learn more about how the companies usually behaves and how they usually those key things you should consider. The next one, we should just consider investment goal. As for the investment goal, you should know your goal. Are you a long-term investment or a short-term investment or a dividend investment? As for that, there are some people who, as I have said, for the management in quantity, if you are a short-term investment, you should know that I'm targeting to this level. These shares, I'm buying these shares at this price, and I am targeting to this point. So therefore, if they reach this point, I should sell them. And if I'm a long-term investment, I would just buy these shares and wait for the future to see how they will behave. As for me, I am a long-term investment, so therefore I don't usually like consider being a short-term investment, because being a short-term investment comes with a high and very high risk. So therefore, being a short-term investment, okay, it's in a one way or the other, it's a good thing because it brings quick money, but still has its own disadvantage. Because tell me why you put more than thousands of money in your account and buy one shares or one company's shares, and say that I want this company, or I believe in the next 2 or 3 weeks, or in the next 1 month, these shares will be able to rise. And then in between that process, the companies drops. You see that you have lost your money and you just invested in one share or in one company. So therefore, being a short-term investment ain't a good thing, because it comes with a very, very high risk. Then the dividend investment or the dividend income, just know that as for me, I invest in these shares because I want just to be paid dividend, nothing more. I don't want to know if the company will rise. I don't want to know if the company will fall. No, as for me, I want to do what? I want to be paid the dividend. So therefore, you should know which category are you. Now, the last one, it is the risk definition or the risk diversification. As for the risk diversification, you should do what? Don't don't invest all your money in one company. As I said in the beginning, the performance of the company, and still the industry outlook, and still the management quantity. You should not be like, you should be able to consider the risk diversification. The risk diversification you should consider is like, don't risk or don't invest all of your money in one company. As for me, back then when I started investing, I took almost half of my capital, or half of my share, or half of my savings, and bought Uchumi supermarket shares. Back then when I bought them, they were around 0.35, and I bought around, I think, how many was it? 200 shares for Uchumi. So therefore, I was just like, because it was cheap then. Because tell me, 0.35 times around 200, it doesn't even add up to 100. So therefore, it didn't cost me much, but for there I didn't consider risking. Or I didn't consider the risk diversification. But within time, some few months, they paid. They didn't pay me the dividend, but the shares rise from 0.35 to 1 share. 1 share per 1 shilling. As for them, 1 share was 0.35. So therefore, it raised for like from here to here. Therefore, they appreciated in one way or the other. Still, don't spend or don't invest your money to a certain sector to reduce risk. Like, as for the Uchumi, for now it has started to rise, but I could not just tell you to consider to select that sector, because it is not guaranteed that they will rise. So therefore, as I told you in the point number 4, industry outlook. So therefore, invest in few companies so that your portfolio will not be at risk. Even if this company falls, this company has raised. So therefore, your portfolio will be balanced, and it won't be like in a negative way. That is it today's, guys, and that is all about the key things, 10 key things to consider when or before buying any shares. Let me just do one final recap, mentioning all of them 1 to 10, so therefore you can be able to understand them from one to the last one. If you didn't get that video, just go back to my YouTube channel, just go search them, or just look and you will see them. 5 key points to consider before buying a shares. Now this one, there are 10 key points to consider before buying in shares. The first one, it is company performance. The second one is dividend history. The third one is shares validation, share price validation or valuation. The fourth one is industry outlook. The fifth one is financial health. The sixth one, liquidity. Number 7, market trend. Number 8, management quantity or quality. The number 9 is investment goal. And number 10, the final one, risk diversification. Sorry for that. Risk diversification. And just for the tips, let me just add you for few things, some few tips here and there. As for this, we are just going to look at the key or the golden rules before investing, or the key golden rules for a beginner. Number 1, invest only money you can be able to live for the what? For a while. Do you know some few people usually just take their money and just invest, but they are not 100% sure if they want to leave their money there. So therefore, risk the money that you are free with it, even if you will lost it, like you will lose it in one way or the other. Sorry for that. If you will lose it, it won't hurt you. The second one is, do not or do your own research. Don't listen to people, because some few people on YouTube have said this market, go and buy these shares, go buy these shares. No, just go and do your own research. The third one is what? Buy quantity company rather than chasing rumors. Sasa the same thing. It is like considering, or it's just going deep to the point number 2, because number 2 have said that do your own research before buying the shares. Number 3, it says that buy quantity, like buy quality. The company which have that measurement, or which have that burden, some few weight, which even if the companies has some turnovers within time. Oops, my phone is just 20%, but it's okay. Even if the company, it's like on its debit or on its downtrend, still the company has what? Sorry for that. The company has weight per share. The fourth one, be patient. Be patient, because wealth is not built overnight. If you want to build some wealth, you should be patient, because wealth, it is built over time. Like utajiri na kujanga kwa ule mtu mwenye akona utulivu, si ati umeamuka umeinvest leo unataka tena kesho ati iko imedouble. No. For me, I started investing last year around January over there, and around 3 to 6 months I didn't see any changes to my portfolio. It was just the same, my negative here, negative there, positive just +1, +2, +0 point something, until this year I have started to see my portfolio has been like somehow changing. It's green all the time, positive. So therefore, be patient. As I have told you, for me, I'm a long-term investment, or I'm a long-term investor. So therefore, I am waiting to see how those shares that I have invested in it, all on them, how they will do within all, how they will do it in the future. The last point we could just say, review your own portfolio regularly, but avoid making emotional decision based on daily price movement. So therefore, this we will just say that the same thing that I have just told you. For me, it took me more than 6 months, to see some changes, to see some positive on my what, on my portfolio. So therefore, don't make some few decisions, don't make harsh decision or quick decisions based on your emotions, because you have invested only 200 on Safaricom shares and you have started seeing that it has started dropping from 200 to 100. No, don't rush doing some just decision like that. Just give it time, be patient, because shares usually, like, shares are just varied. They are not, they are like, how will I say it, shares are volatile. Today they are up, tomorrow they are down, the next day before tomorrow they are just consolidating. So therefore, don't be quick to do some emotional decision. And that is it, guys. That is what you should consider before buying some few shares here and there. If you have any question, don't hesitate, just call me. My telephone number is 0112 That is it, guys. That's my number. 0112 Let me just write it again over here. 0112 That is it. My WhatsApp number. If you want any question, if you have any question, just DM me. Don't call, because when you call, it won't go through. And this is for only business purposes. Nothing more, nothing less. Business what? Business purposes. If you just come and just try or start telling me some few things here and there, I will just block you. So therefore, have a good week. Today is on a Tuesday. Have a good week investing. Let's see you each other on the next video. See you.